Hello, everyone. Welcome back to the Rational Investors Broiler Chicken Show. This is our weekend show, our free show for YouTube. Usually what I do is I speak to sort of level oneers and you guys on YouTube. Some of you been able to sort of teach yourself to trade as we've been going along here. So kind of must have been doing these free shows probably for about 5-10 years now. So hopefully they're a good contribution to the world's karma. Although I do see that there is a now I don't know whether it's my computer's messed up or whether we might even find that the interneting starts falling apart here. Everybody's actually just sort of gotten used to the fact that we have the internet, but I could actually see a situation where the internet just disappears for a while, or it's really splotchy. So actually, maybe we even got a shot across the bow today, just out of nowhere. All of a sudden, oh, my site shit doesn't work. So spent literally the past hour here trying to put it back together again, and I don't even know if I even have half this stuff up and running. So FYI, if you're trying to talk to me on the site's chat interface, it's not working for me right now. So you can send me messages, but no guarantees I'm going to be able to reply to them today. And if anything, I really love somebody's comment there. Maybe this is the push that's needed to break away from this sort of slavery of living in the Apple and the Microsoft dominated landscape, where they kind of have like their feelers into your life constantly. And, like these online gaming platforms and stuff, how they are fighting constantly with like these, Apple overlords to have permission to operate on their systems. Maybe our next step is that Web 3.0 kind of thing, decentralization. That sure would be an awesome aspiration for all us to move towards. And it's weird is anyway, so I've been having computer problems for like the past hour or two trying to get back online. And of course, that just gets you more and more frustrated. I'm supposed to do one of these shows here for the public and make you all feel optimistic and empowered. And I'm all pissed off right now. I don't know what kind of job I'm going to do today. Hopefully I do a half decent job. As I said there earlier, a big part of these public shows on the weekend is to actually speak directly to our student body if they happen to have any questions. Fridays is our level 2 program. Sundays is our level 3 program. And usually there's, points of clarification, that kind of stuff that students, it would be handy to have the old man around just to fire another question at, just to get another perspective, try and help you understand concepts. And then our level 3 program, they meet on Tuesdays. But generally speaking, actually, is what I'm really impressed with is our site members now are so advanced. I don't even think they even realize some of the work that they do is like cutting edge on the world of asset management. And we had, something like the dashboard here. This is a concept that I had sort of banging around in the back of my brain for the past 20, 30 years. I tried to sort of bring it to fruition 20, 30 years ago on my own. But great to see the job that Stuart has done here bringing this into the 21st century. And now hopefully this is a tool we can all use. And it should help us immensely in our trading. Unfortunately, the message right now is it's not very optimistic, which kind of sucks because when this is in rally mode and we're rocking and rolling, it's great to come on and go, all right, we can all get rich. Right now, though, oh boy, I'm hearing. I'm listening to a lot of talking heads, listening to a lot of sort of market prognosticators. I think on balance, our study that our studies, excuse me, our studies that we've been quoting and reciting over the past probably month or two, I think are probably they're pretty accurate. I think they're pretty spot on. And what I mean by that is, I love our blog, and the blog is free. So if you're watching, if you're watching this video through the week, right, and you just want, oh my goodness, see, look at all this, man. It's like they don't even, I don't even think, look at that. Now the site's spamming me. Hey, person, we don't know you, so join our site. That's hilarious. Oh, goodness. Like I said, my computer went a little apeshit this morning, and what's weird is everybody else is like, no, everything's fine by me, everything's fine on my end. So it's clearly something that my computer is doing. But man, I'm had just an absolute poop show this morning. Anyway, we'll dodge all the spam, I suppose, and all that. But if anything, it's kind of cool that, and actually, it's kind of weird. Dashboard. Theoretically, I'm logged in. So it's kind of interesting that it's showing this. See, my computer, I don't know what it is. Is it Brave? Something's gone absolutely screwy here. It's like it's schizophrenic. It doesn't see me as logged in. Anyway, like I said, Chris there just very briefly was like, here, I'll try this stuff. And I don't know. Anyway, we'll see what happens. Well, same thing on Chrome, right? I was over here on Chrome. You can see we were looking at some fun stuff over on Chrome through the weekend, but let's see. That's good. So the problem here is I don't think Rocket Chat. Well, and you know what? I don't even want to screw with it. Who cares? It's not that important. It's just a stupid web page. I hate this stuff. It's so tragic. We're heading into a world now where it's almost like government bureaucrats. Like 200 years ago, there was no such thing as income tax. I mean, governments collected revenue and stuff, export duties and that kind of stuff. But on balance, you could live your life without having the government constantly in your ass. Now, this world that we live in, I mean, hell, they'll penalize you now if you don't withhold income and give it to them, of course, completely interest-free ahead of the fact. Or if you're working for the man kind of thing, they just literally take a big chunk of that earnings. I get the feeling that the computer industry is doing exactly the same thing. It's like they're like parasitic organisms. And so now the computer industry, it started off as we'll improve your efficiency and your productivity and you'll get more stuff done. And now it's just like one leech after another leech after another leech. And then to operate a website in this modern day world, okay, now you got to hire a whole bunch of computer experts that are all, super coders and stuff. I mean, God, it's bizarre how this human thing goes. And what's kind of funny is I actually want to move this backwards. I want to start up a bed and breakfast kind of idea, TRI campus, and actually teach this stuff in person. So I want to go backwards and unwind this scenario. And I just want to know, when do these damn anyway, don't get me going. Anyway, yeah, old school. Damn it. Anyway, so we have a bunch of reports that we published on the site, free. I mean, crazy TRI Beamish guy giving stuff away for free in this world. What a nut job. But anyway, there's a bunch of reports here that all sort of said, whether it be what were the traders thinking right out of the gate, what do we typically do through, U.S. midterm election years, what a typical year that ends in 2 looks like. Probably also, too, we could have done, and maybe it'll be sort of my next report, could have very easily done a report. And actually, that's where are we here? Now all my pages are all screwed up, so I don't know where things are now. Could have done a report on this. What does, if anything, this image right here and the slope of these curves, and actually I think what I like is Chris and Josh, and there's probably other people mixed in, but I think it's primarily Chris and Josh. They've been producing these really cool little short videos on they just take little snippets of things that I've said through oh geez, here's more of this. Show notifications. Why don't you just go to hell? I hate this damn stuff. Anyway, these guys they've done, actually look at that, they just did a new one. It's so cool coming on here because I never know what the hell these guys are doing. Actually, let's see, I'll put the YouTube page up here just so I see it. As you can see, I'm in a pretty salty mood here today. I hope I don't say anything stupid. If I do say something stupid, please understand. It's old man yelling at Bitcoin kind of talk here. We're not all as tech savvy as I suppose we want to be. All right, there you guys over there, all 12 of you. Oh, goodness. Oh, well. Anyway, what I wanted to mention was they've done this cool little sort of snippet. And they're supposed to be doing different thumbnails. So it looks like they've got that going. Way to go, guys. You're awesome. And they're just supposed to be little 5-10 minute videos of just little snippets. So I thought that was super cool. Oh, that's only 2 minutes long. Is that how long we're doing videos? I thought we'd probably do a little bit longer. Anyway, it's interesting that they actually did this. Is a crisis brewing in the banking system? Because that's actually what I wouldn't mind. I was thinking about this, and I haven't really talked to you guys about this before, but how do you define easy mode in investing? And I think actually probably, and I did see like a couple of the references to those videos, I think like you saw that Chris and Josh were putting out things like, where are we here? I thought I saw one that said, oh, here we are. Is the market back in easy mode? It's interesting how they just did a crisis one. So ironically enough, maybe even update this one, just add in a little bit here. Really, this is a relationship between the money market, which is actually extremely large. Think of like all the people that get car loans, all the people that have home mortgages, then of course all the people that have insurance policies. And all that has to do with the money market and rates. And actually, one thing I did here today, I thought it was really interesting, is interest rates are now getting to the point where actually a lot of the pension funds are feeling a hell of a lot happier. And, things like yields on muni bonds. Zach out in Hawaii, I've told you this before. I think, you could get maybe a 1 or 2 year Hawaiian muni bond, which of course is tax-free yield. I think it'd give you a half decent yield now. So, it's kind of interesting how, the irony of it all is that these are rising rates and these are spreads. So if these spreads are rising, it means that the market's unhappy, and it means that we are not in easy mode. when these things are sort of trending lower and trending down. In fact, actually, we had the where was the great financial crisis? Or no, not financial crisis, just this COVID nonsense. You can see how into the crisis there, these things all spiked higher. Oh my God, oh my God, oh my God. And then all the politicians came out and said, oh, you know what? The bankers, they want more money, so let's give them a whole bunch of free money. Shouldn't we debate mortgaging our future? No, shut the hell up, right? Blah, blah. And in essence, that established a downtrending euro dollar Fed spread relationship. This is about as easy gets in identifying easy mode. But notice, it's interesting how basically, remember, and I don't know what it is. Nobody else in public has any interest whatsoever in getting angry at Mr. Musk for the big Doge pump last year and all the people that bought 40, 50, 60, 70 cents into that thing. They're all dead. And it's so bizarre. I don't hear a single person in our society saying, Mr. Musk, you want to maybe pay some of those people back who bought up top? That's what would have happened to any stockbroker had they been in the market pumping it the way that he was in the la 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 la, buy your Dogecoin, we'll all get rich, la 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 la, and the whole pump into that Saturday Night Live event. And I find it fascinating. Is nobody cares. Nobody cares a bit. It's fascinating. Absolutely fascinating. Oh, well, crazy humans. So, in essence, that was as good as it got. And then all of a sudden you start to see this relationship turn back up. And now, for lack of a better term, folks, we are in hard mode. This is difficult mode. And this image right here, this Fed spread, is actually a relationship between the short-term interest rate market, the corporate interest rate market. That's what this is. This is the euro dollar market. And the odd thing about this, folks, is that we've been talking about this for a while. I mean, like this is a monthly price chart. Oh no, what the hell? What does this mean? Wow, that was weird. What the hell's going on? Oh, start free trial. So I guess I'm kicked out of TradingView now? Thank heaven these things don't. I'm almost afraid to do something here. I don't know why the hell that happened. So I'm almost afraid to touch anything now. God, I swear, I don't know. I got the feeling first thing this morning that maybe there was a hacker or something that didn't want me to go on YouTube blabbing away. Now I'm wondering whether it's just the gods themselves are like, Brian, you're giving away too many of the secrets. The humans, they don't need to know this stuff, so we're going to shut you down. I don't know. Anyway, I'll try and get through this. So, this is an image going back all the way to the early 1980s. There's no mystery about any of this stuff. And the worst part about all of this, I swear, it's the worst part about all of this. I've grown up no, don't do that. Oh, so that's they just killed that damn thing. Oh no, you bastards. Oh, you killed Kenny. Oh, God damn it. This is not going well, folks. So isn't that interesting? I'm still logged in here. Maybe if I refresh this, then I'll log in over here. Yeah, look at this. Oh, what a headache. And now I can't even remember my damn passwords and shit. God damn it. This is my actually, I have to say, I've been doing this silly show now for, all these videos and stuff for, I guess, since about 2014. So this is the first time in all that time that I've run into this major of a roadblock here. So, God, I don't even know how to do this. Damn it. Oh, these jerks. Never ends. I don't know how to do this. I guess we'll try and go. Maybe this will work. Fingers crossed. I think I'm logged in. These bastards. Where did that page go? Where are you? Okay. Okay. Phew. All right. I got my head on straight now. All right. So I don't know what I was just saying there a moment ago. Ironically enough, there's no surprises with any of this. There aren't any surprises. And what I find so fascinating is that people in the public are like, "Oh my God, this is so shocking! Nobody, what? Come on! I mean, are you actually trying to tell me you never expected interest rates to go back up again? I mean, come on, drives you nuts." And the irony of it all is that this actually isn't even that dramatic of a rise of rates. And there were some cycles, like look at this one. This was 4.5% increase from bottom to top. I mean, right now, so far, we're only at what, about 2%. I mean, that's nothing. Hey, there's Fjord. Fjord, I've been having a bit of a challenge with the computers here today.
Yeah, if you need some time to set stuff up, I'm happy to talk nonsense as well. If that's
Hey, there's a kitty. Hey, buddy.
hey.
All I need. I mean, it's not really that big of a deal. I mean, and thank you so much for being here and just being the awesome guy you are.
I was on YouTube listening and I was
I
hearing
get
it,
more
and then Eddie
frustrated.
also hinted that I maybe could come in. Yeah.
Yeah, well, it's sweet of you to lend your moral support. So I appreciate it. I mean, I don't want to spend the whole damn show going, "What the hell is wrong with this crap?" So I'm just going to try and ad lib my way through. But one of the solutions that we tried to do was just wipe out the entire memory of everything. So now every single page that I touch is, oh my God, is this going to all be lost? Is this going to be lost? You know that. So that's what's going on right now.
Yeah. Make sure that if you Google certain websites, you don't click on the Google ads. We had a mutual friend of mine lost 400,000 again this week
Oh
because
no!
landing on a phishing website, which was
Oh God!
advertising to Google Ads.
400,000?
Yep.
Oh, Jesus H. Christ.
Yeah.
This is crazy.
So I totally agree with what you said earlier that these kind of like computers sometimes it doesn't really boost productivity, but they're keeping you hostage.
yeah,
And
hostage. Ooh, that's a good word. I like that.
yeah, playing the addiction card.
Yeah, and that's the thing, right? This is worse than an addiction
Mm,
because this is almost like you're an amputee. And
yeah.
you go and you get like an artificial limb or something, and you sort of get used to using it. And all of a sudden, somebody just comes along one day and says, "Oh, actually, we're going to take your artificial leg away."
Yeah,
Right?
chop it off again.
Yeah, and then
Yeah,
you're like, "Now what the hell do I do?"
and the same goes with daily transactions like cash money. Where can you even pay anymore with cash money? And if you need a lot of cash money, you need to pay the bank to even get cash money.
Yeah, it's
So
fascinating how this species is the direction it's going in, eh?
yeah,
It
I
is.
don't want to take over the show either, but just one more thing I want to touch base on now that I'm here anyway, breaking in, is for
Yeah,
example, what you see now is one of the Dutch banks.
yeah,
They are now showing you your CO2 um, um, expense, basically,
yeah.
or usage on
No,
all the transactions that you do.
ah.
So we know what the next step is, right? That in a few
They're
years
gonna
you get
penalize you for your CO2 expense, even though you don't really have.
exactly you get a carbon tax, or you end up going to the to get some groceries, and it's like, nope, you already spent your CO2 limit for this month, something like that.
Wow, brutal.
That's what I'm thinking. Yeah.
Well, I do like the idea of getting like a nice, maybe like 20, 30 acres or so, and just planting our own fruits and vegetables and having chickens running around the yard. and a big brick wall, and we just, sorry, if you're not TRI PMA, you're not invited.
Just make sure that you don't shout on a winning trade, winner, winner, chicken dinner, because then they will flee from the property.
Poor chicken. We'll eat their. Oh no, I think with this conversation. Actually,
Sorry.
it's good because you probably. I don't know whether you heard me say it. Like in 14 years, I haven't had such a shit show here for one of these shows.
Yeah.
If anything, it's great that you popped in. You sort of right the ship. Okay, Brian, it's not so bad. We'll get through this.
Yeah, exactly.
Good. If anything, that's great PMA. I love that. That's awesome. All right, so let's try and go back to trying to help these people.
Okay, good luck, Keith.
Thanks, man, and awfully appreciate the good comment. And by the way, give a hats off to Chris. I mean, he tried really hard to try and help me. So you guys are awesome. It's just my piss poor attitude. That's all. Okay. Okay. So I guess I was listening to another gentleman that I really like. And it was actually somebody on the site follows along really closely. I think Sanjay, I think his name is. But anyway, Larry Williams had a new video that he put out. Where what was interesting was, and Larry is the guy who brought us. Where is the blog? There. He's the guy who brought us this study. And what's really interesting, and it kind of sucks about these silly humans because it's so cliche. But, when we're at the top of the market, is anybody talking about, the potential for a correction, for things to maybe roll over here? Do they get that interested up here? The answer is no. Still talking about dog money and all that kind of nonsense. Then the market starts to roll over and we start to break. And what's fascinating is I think you can make the argument that the talking heads will start to get really bearish when they start to see, and I'm just looking for a chart I can use here, when they start to see price action that it's almost like they can't talk a certain way until certain thresholds are hit. So something like the stock market, if we just use the S&P 500, they have this kind of funny unwritten rule, and it's a terrible rule. And anybody who's a market technician knows that it's just garbage. But, in the media, and of course that means in the newspapers and all that, they won't actually say that things are getting bad until we get at least a 20% correction from the top. So you can see where we are here. But what's fascinating about all this is when we get to this point, then everybody starts going, oh, correction, recession, end of the world, all that kind of fun stuff. And I suppose you could argue it's sort of the same kind of thing here. In this particular case, the ultimate bottom was 35, but once we hit that sort of 20 level, which is right in there, that's when the public starts to get all freaked out. But the irony of it all, just think about it in this real terms. You see how the market almost really kind of went down, up, down, up, down, up. Basically right around that 20% correction level. So what that means is the media at this point right here starts going, sky's falling, capitalism is over, right there. But would it have been a good idea for you to get wrapped up in that emotional decision? Do you think that, I hate to say it, but, stupid 1%, do you think, they own these media outlets? Do you think that they actually sort of, stoke the fire, pump the message? Because keep in mind, the stupid talking heads on the TV, 90% of them are just basically they're whores. They get just, paid to say certain things. And if you say certain things more adamantly, they will pay you more. Hey, and you'll get bonuses. Ooh. Anyway, the point here I'm trying to say is this is kind of backwards look thinking. So up here, you should have been, hey, does anybody notice that the 1% is selling a ton of stock into options expiry? Which, of course, the old Beamish, he loves to go on about the options expiry. And the 1%, they sold just a staggering amount of stock through here. I mean, just trillions of dollars. And then here, oh, it's the end of the world. You should be selling. Get out. But look back in hindsight. Well, should you have been selling, or maybe should you have been buying? Buying when they're crying, selling when they're yelling. So what I'm worried about right now is, are they doing the same thing? We all look at this chart, and every single person at TRI, the very first thing that you should say is, and let's do a poll. I'm not going to even say anything more. Let's just see if you guys know. Oh, very good. And I kind of like it. We're getting better at this, right? One person jumped through the hurdle. Thank you. Appreciate it. Jump the hurdle. What should we, at any given point in time, whenever you look at the market, you should at any time say, this can happen at any given point in time. Like I said, somebody already answered the question correctly. Oh, there's somebody on YouTube. And frankly, you got about 20, 30 people over there on YouTube. I want to see 20 or 30 people say, at any given point in time, you should expect the market to correct this amount. And you don't even know whether it is a bull or it is a bear until this event happens. 2 people? Seriously? Well, Zach says first up. All right, I'll give you a half marks for that. Not bad. Come on, all you YouTubers. I mean, I want you guys to really learn this. And the only way that I know that you're learning this is if you jump, you regurgitate. So just humor the old man, please. Well, that's not bad, but I'm just saying, quite often what you see is, pump chasers. All you guys are a fan of Collins, right? Colin, he's the shit. Actually, I think Colin's a brand new dad. He's living in his Wonderland hacienda. Let's call it that. So anyway, the point being that at any given point in time, I always tell all my students, and you just set your watch to it. At any given point in time, you should expect the market to retrace 38.2 of its most recent move. Now that's kind of interesting, doesn't that? Do you see how the magic 20% quote unquote correction is actually going to do nothing more than just bring us back down into a level where we're just going to ask whether we're actually in a correction? Do you see how that works? And just like we said here, what's going to happen in the media? And, that CNBC is a really, really good example, man. I'm actually, frankly, a bit disappointed. Now, most of the older guys that I had a lot of respect for, they actually started at CNBC back in the early 80s when that thing was just getting going. They're all gone now. And what's so sad is I do find that they have a whole bunch of these sexy little female hosts now, which I do find a little suspicious. Now, are they trying to sell something here? Sex sells, sell the sizzle. When I first started watching CNBC, they had Ted David. If anybody knows what Ted David looks like. and then they used to have, oh God. And I love the old show hosts. They were great because they didn't take crap from anyone. And I'm thinking about one guy in particular, but I can't remember his name. Anyway, he used to always call Microsoft Mr. Softy. And I remember, man, I used to have sales managers and stuff who used to get angry at me. Don't call it man, Mr. Softy. uh, well, so that's just it, Stuart, is that it's changed dramatically. Like now, whenever I turn on CNBC, they always have some little hottie on there talking markets. And I don't mean to be rude, but I have very rarely ever seen the two actually work well together. And then, like I said, they're great at reciting the message. Don't get me wrong, great at reciting the message. But I think that actually they have a fiduciary responsibility, right? If anything, they should be telling people, well, this market has come an awfully long way, awfully long way. Would not only would it be what's the term I'm looking for? Sometimes it's actually a good thing for markets to go down. I mean, hell, you guys are all worried about price inflation. I don't mean to be rude, but this market going like this is inflationary. The stock market is the ultimate leading indicator in a society. You're bitching about price inflation. Well, I'm sorry, folks. That is inflation. And the same thing on your Bitcoin. That is inflation. This is the exact moment when shouldn't we be mortgaging our kids' future and selling everybody out and destroying the purchasing power of our currency? Fuck you. Sure enough, they printed all that currency. They mortgaged the kids' futures. There's your inflation. What a surprise. And people are like, really? No, Bitcoin's going to $100,000 because Bitcoin's so awesome. No, Bitcoin did this because all these stupid idiots went and printed a whole bunch more currency, made this thing that you value these assets in less valuable. So since Bitcoin doesn't give a fuck, it is basically the world's computer. I mean, Mr. Vitalik probably would argue that, but like because of the POW cost of production model, we know what value is. So what's going on here? Well, it's if you're going to go print a whole bunch more currency, M2 money supply, all that kind of fun stuff. Well, it's these kind of assets that technically want to remove that part of inflation from the equation. They have to go up commensurately. And I guess the point that I'm trying to make here is we all know Bitcoin is as volatile gets. Don't kid yourself. I mean, seriously, folks, don't kid yourself. Why do you think Bitcoin actually did this? Wasn't there something called quantitative easing or something that was just started through here? Could that be half of the reason why the price went up so much? And then, let's go back and look what was Fed policy through 2014, 15, 16. I mean, the cool part about it is we should be able to correlate this. Where are we? I guess it was this one. All right. So, what a surprise. Do you see? And let's do a poll. Let's see if you guys can play connect the dots. What was the cost of money through? What was the trend of the cost of money through 2014-15? There's right there. There's January 2014. What did interest rates do? It's remember, rising interest rates. They're trying to deflate, trying to pull the pin out of the bubble. Right, there's rising interest rates all the way to August of 2018. So I go back to our Bitcoin chart. There's 2014, 2015. So it makes perfect sense why Bitcoin did what it did. It's interesting how into 2018, this was all rising. And then we get 2018, 2019, you get a big pullback. So the zero-sum game is, ironically enough, from that 2014, 2015 peak there to there. That's probably sort of your natural inflation rate. That whole sort of thing. And then unfortunately, they finished raising rates. They're done. So now this thing can start going crazy again. And sure enough, there to there, actually, I guess there to there, kind of neutral. Rates were kind of high. And so as a result, Bitcoin price kind of stable. And then, they went and just basically threw a bucket load of money at the market. That's this through here. Massive inflationary, and crank up the amount of money in the actual money supply, and handing out stimmy checks. I mean, just ridiculous, just insane inflation. And that in essence is your insane move. Whoops, darn. That is your insane movement from there to there. Now, I get the impression that first off, and hopefully you all are learning this, the Fed is horrible at predicting what's going to happen in the future. All through this, of course, throw bucket loads of money at the market. Oh, yeah, there won't be any inflation. No, there won't be any inflation. Shouldn't we debate mortgaging our future? Shouldn't we debate diluting the shit out of our? No, there won't be any fear. There won't be any inflation. You might argue that, ironically enough, the Bitcoiners and the Bitcoin community should have gone to the Fed. This is going to be very, very inflationary, what you've done here. Now, what I find interesting is it feels as though the Fed is trying to get some sort of credibility back in the marketplace. I don't even think it's actually I said this earlier. I don't think the Fed really has any choice. It's the marketplace that's saying, your crazy policies are now officially inflationary. And hell, you look at like Canada. I mean, it's just a train wreck here. So it seems to me that this is, number one, nobody should be surprised to see this happen. Then, of course, we happen to have Jupiter-Saturn cross the end of a cycle. I mean, please, everybody watching on YouTube, learn this. Keep an eye out for when Jupiter-Saturn's cross, because usually, they say the business cycle is like 10 years. But what I've noticed is that every single cycle seems to pivot on that damn Jupiter-Saturn cross. And it also pivots on the Jupiter-Saturn conjunct. So ironically enough, like if we go look at the S&P 500 and you all say, well, the reason why the market broke in 2008 right here was because of the housing market crisis and all that. And I would actually make the argument that this was one particular Jupiter-Saturn movement from conjunct to opposition. And now here, this has been one movement, although it doesn't quite line up, does it? Should have been. Oh, yeah. It's kind of weird how this worked. But anyway, Jupiter-Saturn crosses, I think, all sort of happened. And, we had our Pluto. In fact, yeah, I remember it was like early. It was like January of 2020. I think there's like 3 of them that happened here. But in essence, this is another sort of Jupiter-Saturn event. And what I think happens is that basically the market moves. Now, of course, this is twisted here, so I don't quite understand. Okay. I think there was a Jupiter-Saturn cross right in, or opposition here. And I think what happens is that the economies move in these sort of 8-year cycles, if you will, which means that, the cycle that we're in, and now, thank you, Mr. Putin, I guess we're going to be in a cycle of war now. I don't see this stuff ending until 2030. And actually, that makes a lot of sense. I heard somebody saying that 2030 is sort of the official transition into the age of Aquarius. It probably is the catalyst for whatever sort of there's supposed to be just a ridiculous global war in 2030. But ironically enough, that might actually be sort of the end of this. Like we're just skirmishing now for the next 5-10 years. Kind of like what I see happening in Ukraine right now is similar to Italy in Ethiopia, or similar to the Spanish Civil War. I see a lot of sort of similarities where we haven't sort of gone full blown into utter global war. We're still in sort of the skirmishes stage. Yeah, wonderful. Anyway, so sickness, war. I think those kind of things are the dominant themes over the next 10, 20 years. Well, 10 years probably. But I guess just, from a technical perspective, regardless of the Jupiter-Saturn cross stuff, I mean, at any given point in time, you should look at an image like this and you just should say, what's natural, what's healthy, what's normal, what should happen is actually the market should come down to 38.2s. Now, here, and what I wouldn't be surprised, and somebody made reference to this earlier, and it wouldn't surprise me, it would actually make a lot of sense, is what happens in the U.S. market is actually we do our call-in pump chaser zone pullback. And I do like the idea that basically the U.S. market probably, we probably do something like come thump and then sort of thump and then go kind of idea, something along those lines. But I guess the whole point of all of this rant, and it's tough when you're in this situation because, a lot of people who are watching these videos, you're relatively new to the game. So, do you have the staying power to wait this out? All right. I mean, I don't know how long this takes. It might take a year or two to wait this out. Good part about it is, in a weird sort of way, if you're relatively new to the game, we might actually even do things like come all the way down to reload zones. And you might actually get a pretty good buying opportunity out of this. It wouldn't surprise me. But what it does imply is, oh, Jesus, what the hell do we do until this thing works its way all the way down here? And the answer is, short the market or buy put options, trade futures contracts. Very tough to justify going and like investing your 401k in the face of that. Yeah. But ironically enough, actually, I don't think that actually happens, believe it or not. But this is the US market. I actually think something that actually is really dangerous right now, I think is something like the European stock indexes. We kind of joke on the site, how many German automobiles are being bought and sold right now? And of course, what's the economics of the German energy situation right now? Are they happy-go-lucky? Or is Vladdy got them by the short and curlies? I think we all know the answer to that. So this is probably the part of the market that I would be most leery about. Not ironically enough, I actually don't think that the U.S. market is actually the most dangerous. Now, having said that, you can see where they're going to pull the market back to, just so that the talking heads have got, we're officially in correction mode. And of course, the public is freaking out and they're selling. But I actually think that at this point here, you probably have to start thinking about cyclical bottoms. But again, how long, keep in mind, this is a weekly price chart. How long, somebody had just said there sort of earlier, you're starting to see things like the market's smiling at you, especially in Germany here. right? That doesn't look good. What are we supposed to think if you see the market smiling at you? Better be careful. And in a weird sort of way, also too, I think what I can see is AB, CD. So on this next leg lower, I could very easily see the European stock market get really beat up here. So interesting how that would take us down into reload zone there. And Zach saying there's a shark setup. Oh, well, suppose, yeah, nice little stab down into 78.6, 9,700 gap. Oh, yeah, look at that. There's a gap down there. Yeah. So I actually think that these are the markets that are most dangerous. Not the North American markets, which is kind of funny because Canada sort of caught between a rock and a hard place. As you can see, there's no real actual breakdown there, though. But what I'm worried about here is there is an insane real estate bubble going on in my country that will probably pop. What's interesting is you can't really see it. I tried to do this the other day. Maybe somebody on YouTube knows the answer. But if I wanted to go Canadian mortgage, for some reason, there's the U.S. mortgage. Remember I tried to do this before? But I can't seem to find the Canadian mortgage. And I don't know what I'm doing wrong here. But, if you see the Canadian mortgage rates, they are cranking up. And, our real estate market's already in just an absolutely insane bubble. I'll show you there. This is the U.S. one. I mean, has the fundamental situation changed a little bit in the interest rate market, people? I mean, seriously. Yeah, I mean, I can understand it. And this is the worst part about it is, like countries like Australia and Canada are known as commodity countries. And of course, we had the build out of the Chinese economy into 2008. Remember 2008, Jupiter, Saturn cross and conjunct and stuff. So we had the build out of the Chinese economy into the 2008 Olympics. So that helped the commodity demand. Hell, I watched an article yesterday where Australians are actually saying that they feel as though the Chinese are actually in open economic warfare with the Australians right now. That's not the kind of environment that you look for growth. Now, Canada's a funny country in that it's got the United States as its neighbor, and the United States has been sort of trying to get its act together here over the past 10 years with, of course, the whole U.S. financial crisis, great GFC and all that. But Canada never did go through a GFC, and I've barked endlessly in public about Canada should have never had a quantitative easing program. The only reason why they did the quantitative easing is because they could, right? The public didn't say boo. So the bankers were like, screw it, man. If the public doesn't care, issue more bonds and let's just keep making a fortune off of all the fees and interest that we charge these people. So they did. And that's the worst part about capitalism, people. You have to understand this. Rothschilds do not give a flying flute about your standard of living. They do not care about you. As one of the Rothschilds historically said, if you, I don't even care who's in charge of a country. I control the money supply. They work for me. And I would say Canada is a really, really good example of that. It's fascinating, actually, to see how just to hold on to political power, the current leader in this country has actually joined forces with the socialists here. It'd be really interesting to see how the 1% and the oligarchs in Canada actually respond to that. But what I would say is that the commodity countries of the world have had basically a 20-year run here. And really just based off of this image, this is the U.S. mortgage market, so it's not exactly the best image to look at. Probably the best image might even be like the Canadian dollar. How do I do that? 6D, or is it 6C maybe? All right, so here's the Canadian dollar. Canada, of course, and isn't that interesting how we don't even have any data prior to year 2000? Here's a really good example where I think Big Brother is actually undermining us because they don't want us to see these long-term trends. I may make an argument that this was all George Bush and his cronies bidding up the oil market. So as a result, the Canadian dollar does really well in that. But probably what we have to do is look at maybe at like a Forex market. Let's see what we get here. This only goes back to 94. God, it's terrible. Like, why do they do this? It's so bizarre. I mean, this thing's been trading forever. So to say that it started in 2003, I mean, this is ridiculous. And it's so hard to show you guys these long-term trends in these assets when they do this stuff. Anyway, so this was the last sort of, we'll say, anti-commodity cycle. And this is a strong US dollar. This is a weak Canadian dollar. And ironically enough, this cycle was supposed to pivot right here, where this is actually the peak of Canadian dollar strength, worst US dollar weakness. And we actually start a 20-year cycle here. So theoretically, this should have been pushed out to like there. It's actually interesting, given this image, how utterly bearish people were of the US dollar. And the irony of it all is that there's actually where the US dollar was weakest, way over there. So, and that was, they floated this quantitative easing nonsense, which of course just like, why on earth is Canada quantitative easing? They should have never quantitative eased. So ironically enough, had Canada not quantitative eased, its currency would have been a hell of a lot stronger. So it's kind of ironic that the Americans did their quantitative easing and everybody else in the world had to basically follow suit. Because really, there's no reason for Canada to do quantitative easing. But oh well, that's typical crookster banksters. So, again, there is sort of the peak of the US dollar into that dot-com boom and the baby boomers sort of, peak earnings years. And ironically enough, this US dollar was actually supposed to be weakest right here. So go figure, eh? So we're now into actually a US dollar bull cycle. So it's kind of ironic that we've actually started the bull cycle from quite a lofty level. And it's also fascinating how insanely bearish the public is of the US dollar through here. Everybody and their brother was convinced the US dollar and the US economy was going to collapse. And they got that completely wrong. So with that kind of image, you tell me, let's just do a quiz here. I'll see whether you guys even get this or not. Is that an inflationary or deflationary image? Wrong. Hey, Edward, he says D. There you go. Sorry, Artem. I don't mean to be rude. This is extremely deflationary. Because what this means is that people are pulling money out of all the sort of the growth proxies, and they're parking it in US dollars. And I guess what I'm really talking about is like, look at this. I mean, this is a runaway train right now. The US dollar was we were in this deflationary push. Everything was moving right along. And then we have this stupid sickness nonsense. So we're actually back to where we're supposed to be originally. And, this is what happens when you dilute your currency and they print a whole bunch of money trying to inflate the world, right? And at exactly the same time, what did the euro currency do? 6E1 exclamation mark. So that's exactly this time. So that's inflationary. And then, wow, holy moly, this is hugely deflationary. Hugely deflationary. So, I mean, the interesting thing is like a typical European. I remember a few years ago we were talking and the Europeans were bitching about how high their inflation was. So ironically enough, with the falling euro, that actually should be deflationary for you Europeans. Be interesting to see, like, for example, if we went, I'm not quite sure how to do this. If we did crude oil in euros to actually see what the price of crude is doing. That's interesting. So this is now in euros. There's that insane crisis. But notice how, 1, 2, 3, 4, 5, 6, 7 weeks now, actually, a better part of 2 months. Actually, this crude oil market's been coming down. I don't know whether that's really of any benefit or not. I'm gonna have to think about this. I wouldn't mind trying to figure out what the price of crude in euros is. I mean, yes, crude oil prices have gone up dramatically, but I wouldn't be surprised if actually it's a zero-sum game if you price them in euros. I don't know. That's a tough one. So I do see, I mean, and of course you see the headline inflation numbers, right? Food prices, energy prices. I guess what's shocking, of course, for the poor old UK people is you look at like natural gas prices over there in UK. UK natural gas futures. Woohoo! Interesting. Look how natural. I mean, really, the irony of it all is now we're actually back to prices from last fall. Isn't that kind of interesting, eh? So, war with Russia? No, we don't see no war with Russia. Well, that's fascinating. So that if this thing comes crashing back down into these lows, again, that's deflationary. So I wonder whether we're going to head into some sort of deflationary spiral here, which is, of course, is the last thing anybody's expecting. And it's very, very hard for me to convey this concept to people. Remember, a lot of these commodities, they're priced in US dollars. So what happens to a commodity if it just stays put, does absolutely nothing, no supply and demand change at all, but because it's priced in US dollars and the US dollar is going up, which way does the commodity price have to go? And this is really, really simple economics 101, folks. If nothing changes with the supply and demand for a commodity's underlying, but the US dollar index itself is screaming higher, and keep in mind, this is a weekly price chart. If it changes to a daily chart, there's the euro US dollar. It's screaming higher. What direction do commodity prices have to go? Anyone? I got one person who replied. Thank you, Edward. Edward and Ewald. You guys are the two E's. Hey, there's Alex. Alex, PMA Bull Alex. Hey, good. Yeah, I mean, and of course, people hate when I say this stuff, right? Because you're all expecting some sort of crazy commodities. Emily, where's Emily? Actually, is Emily here today? I don't think I see Emily here. Mind you, maybe he logged in under his own login. That was funny. Emily, looks like you need to shave. So, again, I've been barking to you guys about a lot of things that I think are deflation. If you see the stock market falling, that's deflationary. I think that the stock market is correcting. I don't think it's crashing. So don't get sucked into it's the end of the world bullshit. It's correcting. It's very normal, very healthy. So, if you do see this US dollar, and it's got a head of steam behind it. So if you do see it perk up here, try to understand that's a very deflationary push. And then also, too, I mean, there's some guys fucking running around thinking about lighting off nuclear weapons. And let's say you're, I don't know, any company. Ford Motor Company. There's a pretty just out of the blue company. And I want to go, I'm in, the economy of the world is growing, which of course is inflationary. And I want to go build a plant over in Europe to build more cars and sell electric vehicles, right? Because that's what Greta wants. Then some clown over in Eastern Europe goes, hey, check this out. Hey, we're firing off our ICBMs. We're getting ready to nuke you over in the West. What do you think Ford Motor Company at their board of directors meetings going? Do you think they're going, you know what? Let's go and buy that 100,000 square foot plant in the middle of Kiev because that's a great place to build cars these days. What the fuck? I mean, I just use it any company. You could use it. I mean, I don't care any company whatsoever. How about like all of the international companies that did business in Russia and all of a sudden now they have to shut everything down? Is that inflationary or deflationary? So, is there a proxy in the world for this whole inflation deflation debate? And yes, I know we have this new thing that started up over the past 5-10 years and everybody's all excited about this, but just classic economics 101. Is there something in the marketplace, really keep it simple, stupid, that is a good sort of inflation deflation kind of proxy? Don't overthink this. Yes, and the color is definitely a hue that looks awfully similar to big spheres floating in our sky that give us all life. Anybody over on YouTube? Just take a guess. Is there some sort of asset that people think that it's not a bad place to park your wealth if the world is inflating and the value of money is collapsing? At the point, you sound like an alien to the public. Friends and family, you kind of see the matrix. I guess so. Hey, thank you, Artem. How about over on YouTube? Anybody over there? You guys are all the public. Where's that Great Del Moody guy? Hey, Carson, nicely said. Now, well, remember I said, let's leave the corn out of this for the time being. I think corn, to a certain degree, I agree with you. Problem is, I think corn prices just got bid up way too high here. If it was trading at or near the cost of production, I would wholeheartedly agree with you, Jordan. But the way that they bid this asset up, it's trading like a stupid fucking schoolgirl tech stock. They plan to grow their subscription base indefinitely, and everybody prices in unlimited growth. And so as a result, they trade at like absolutely insane multiples. And then we at TRI go, well, at some point this thing's got to come back down to earth. I mean, I thought it was interesting. Let's just even see now. Who can like this? What would be a half decent PE ratio to buy a tech stock? I mean, that's a good question. Let's see if there's anybody who actually knows what historically, and we'll call it a tech stock, so we'll give you a really fat multiple. What is just a good normal rate? Anyone? No. That's conservative, Josh. And I love your thinking. You're the man. But I'm thinking like an easy way to look at it is, the S&P 500. What is its sort of PE ratio? Does that even show on here? No, they don't even give it. I wonder how you figure that out. There should be a way to figure out what the PE ratio of this S&P 500 is. Maybe we'll go like Yahoo, maybe. And we'll go SPY. And then we'll go Yahoo Finance. Let's see, do we get a PE ratio? PE ratio 4.45. No, I don't think that's right. How irresponsible. I mean, that's ridiculous. There's no way the S&P 500 is trading at 4.45. That's ridiculous. That's insulting. So anyway, I'd like to show it. Somebody give me a website that actually shows you what the current PE ratio of stocks are. Kind of pathetic. You can't even get this, eh? Actually, we used to have, there was remember Coifin? I remember that was a really popular site for good fundamentals. Look at this nonsense. So can I not even get a price quote here? Well, maybe can I get a price quote from something? No, I guess you have to be a member of this thing. Oh, well, that's too bad. The link Josh sent now looks interesting. All right, what do you got here? Hey, there you go. Nice. All right, so, yeah, this is a good example. This is stupidity. What sort of historic norm? I mean, you can kind of see. On the S&P 500, if I was sort of like, what's the mean here? And this going back all the way like 100, 200 years. It looks like it's about 15 times earnings, right? Somewhere in that area. So do you see why 7 is a little bit low, Josh? So even all up here, you guys know, I mean, any of you that has like any sort of, credibility as a market analyst, you know that at some point this stuff's got to come back down. I mean, do we have to have a trough like this or a trough like this? I don't know when it's going to happen. I mean, do we bang around? But just illustration purposes, you can see there's the mean 16, median's 14, which is about 15. Obviously, this is just ridiculous. This is basically when the U.S. was basically bankrupt and they printed their money way out of it. But the problem here is, and this is what I was going on about Bitcoin, is, they bid these stocks up. Actually, well, that's not bad. I remember when we used to look at these companies like Netflix, and their PE ratios would just be absolutely ridiculous. So if anything, it's great that they've knocked this thing back down to earth, that at least now it's trading in somewhat realistic PE ratios. So actually, believe it or not, that's not bad. The key here for us is we want to see this price to earnings growth. We would ideally, actually, that's not a bad earnings number, a PEG number. So ironic enough, from a GARP perspective, that's not bad. But I mean, Amazon zooming up here and everybody loves it. You can still see it's trading at a hell of a lofty level here. But a few years ago, when you looked at these damn PE ratios, and this is what I kind of wanted to see was, but it doesn't look like it can. But maybe, Josh, can we plug in stocks here? I wouldn't mind getting a chart of something like Netflix's PE ratios. They were just absolutely over the, just insanely high, just even a few years ago. And so all they're doing is they're just bringing, with this latest correction, right? They're just bringing these PE ratios back down to normal levels. Trying to think, probably actually maybe even that Tesla probably still is. Yeah, I mean, so, here's a good example. You guys remember a year or two ago, you couldn't talk shit about Netflix, right? Are you with me? What was Netflix part of that you had to be invested in? If you were an investor, you had to own these 4 stocks. Come on, everybody knows the acronym. Ironically enough, it's old now. Nobody follows it at all. All right, if you find me, so he's got the historic Netflix PE ratio. There we go. So you can see, thank you, Josh. I mean, look at these numbers. That's ridiculous. 600, is that the stock price? Oh, here's a PE ratio. Yeah. I mean, look at these numbers. Like, why on earth do they have a PE ratio of like 400? So, gee whiz, they're just slowly bringing the PE ratio back down to normal. So, what worries me, all you guys, is do you see the trap here? Holy crap. 135 times earnings. And, as long as he keeps selling more and more and more cars and all that kind of stuff, but still, even if they absolutely knock the cover off the ball with their growth numbers, there's still 65 times earnings. Remember, we said the historical norm for PE ratio in the stock market is like 15. And if you're a super duper growth stock, fine, we'll give you a fancy PE ratio. Like you can even see now this thing on its knees, and now it's trading 20 times earnings. Yeah, I would actually say this thing's probably near some sort of bottom. How ironic, eh? So, but you can see, I mean, and what is this? This isn't even that long ago. What do we call this at TRI when we have price that's making higher highs, but something like PE ratios are making lower highs? What would you call that? That's a warning sign, folks. But yes, this thing was priced for growth, for perfection here. Thank you. My two E's got that correct. But at some point, this has got to happen down the road. And I'm almost afraid to see what something like Tesla looks like. Oh, no, I don't know how to do this. How do you plug in a different stock into here? Anyway, if you can find the Josh, if you can find the Tesla one, that would be kind of cool to see what it's doing right now. I mean, I have no real opinion about this. I don't really think it's a buy, and it might have been an interesting short. There was a really cool weekly key reversal that came in a while ago, which helped set up a spread trade that came in over here. So I think at this point, if you were trading this, you could have got your spread trade on there, and basically it's a free trade now. But frankly speaking, I think this story's over. I mean, look at this. At TRIers, you got no business coming in on this. You want to trade that spread, you couldn't even really get a double out of that. It was just purely an options trade, nothing more. So, okay, now what do you got? So here is actually, this should be interesting, just illustration. So here is Josh's Netflix or Tesla. Interesting. So ramped it up dramatically. PE's been falling, but the stock price has been rising. And still at like 200 times earnings. Wow. Now, they did come out with some pretty good numbers, so that will be knocked down. Like I said, I think it was into double digits, not triple digits anymore. But it's probably a warning sign that Wall Street is not bidding up the growth prospects, and they're starting to sort of temper their enthusiasm. So in a weird sort of way, you can kind of see the divs starting here. I don't think it's in anybody's best interest to come in and buy a stock like this up here. It's pretty dangerous. Then, of course, this is a weekly price chart. What are we supposed to think if we ever see the market smiling at us? Oh, boy, that looks a bit dangerous. Okay, so got off on a wild tangent there. Kind of like the way that these tech stocks, they bid up to these absolutely insane PE ratios, which is kind of an illustration that things, maybe the rubber band's getting a little stretched too far. I like to follow things like price to book. So just out of curiosity, guys, what's the ratio that Brian actually gets excited about when he considers buying a stock? What price to book ratio does Brian really like, so that he knows that he's not coming in and buying an overvalued asset? What ratio do I like to see here? This is the price of the asset divided by the book value of the actual company's stock, i.e., you take all the pencils, all the erasers, all the cars, all the desks, everything, line them all up, all the mufflers, all the tires, all the bumpers, all the glass for the windshield. That's the sort of the pieces that Tesla owns, puts it all together into a car. and then sells it into the marketplace, right? Hopefully at a markup, and that's their profit margin. What is the ratio that Brian loves to see so that he knows he's not walking into an overvalued asset? So Artem says, Edward says below 1-to-1. Ewald says 2. Artem says 1-to-2. Jordan says less than 1. Josh McGowan says less than 1. I mean, yeah, if I can buy less than 1, then that means I'm buying cheap, right? And if they break the company up into bankruptcy and then, the assets actually get divvied out to the shareholders, I'll get more money back than what the current market price is. So you tell me, is that trading in and around a ratio that Brian would find attractive to invest his hard-earned money in? Right? You saw that the general consensus is, let's say, somewhere around book value. Maybe Brian will pay up to maybe a couple times book, but I really don't like to pay that much. What's this thing trading at relative to its book value? There's the book value of the stock, $29.80 a share. Are we trading at $29.80 a share in the open marketplace right now? $1,005 a share? Do you see how expensive this stock is? Almost 34 times the book value of the company. Wow. Could Brian justify investing in a company like that? Who can tell me if you ever see this ratio that the company has this amount of cash on the books relative to the price of the stock, what ratio, if Brian ever sees it, he says, holy crap, just buy the damn thing. It's a no-brainer. What is the price to cash ratio that Brian likes? That if you ever see this, you go, this is a no-brainer. Just buy the damn thing. It's 1-to-1. Right now, Tesla has $17.63 of cash. I mean, they're earning money, so I'm not too concerned about them burning through this. But relative to the amount of cash that the company has, oh my goodness, is this expensive? This is insane. So, and I even said earlier, and let's see if you guys clued in. If I was going to buy a growth stock and I was willing to pay up for it, what is the maximum ratio I want to pay for the peg? And oh, by the way, if you're watching this, these are all fundamental models that we teach in our education program. How do you value stocks? What type of stock is it? Where does it fall on the value spectrum? Does anybody, I said it earlier, and I remember I had said Netflix actually meets this number. So believe it or not, where Netflix is now, I could actually justify going and buying it if I believed in the company. Is that at a ratio that I can buy? Anybody who's taking the level 1 program? What's the GARP ratio? Really, we want to buy assets that are trading under 2 times PEG. You don't want to pay more than $2 for a dollar of earnings growth. This thing's trading at 3.5 times PEG. So whether it be the price earnings ratio, whether it be, hey, I buy growth stocks and I use growth stock metrics, whether it be I'm a value hunter and I like to buy assets that I know are not overvalued. I mean, this doesn't meet any of those. This is just to me, this is a potential train wreck that's waiting to just explode. And the worst part about this is you can see the insiders of the company themselves. Wasn't there some big insider guy who was into dog money last year? What was he doing recently? Was he buying this stock or was he selling it? And if he's selling it, what business do you have whatsoever of being invested in this company? That doesn't make any sense at all. So this is sadly, and I know, please don't be angry at me, everybody, but please understand that that image is actually very similar to I'm going to find it, to this image. You can see where the S19 and the S17's cost of production is. And of course, this is all open debate. What is your average electricity cost? It's interesting that we saw, UK natural gas prices are actually the same price they were last fall. So all this war bullshit, premium into energy prices, there's no difference. It's the same as it was last fall. And keep in mind, natural gas prices by definition are insanely volatile. That's why a lot of guys, I show the guy, that stupid idiot, optionwriters.com. I mean, it's what really sucks about this stupid game. I think that's what this guy's, or maybe maybe I have to do a Google search. Yeah, it's gone now. I'll go natural gas options and then bankruptcy. You can see I've looked at that before. But this guy here, what's really sucks about this is look how high on the hog this cocksucker is living. French cuffs. Like, you don't eat at McDonald's if you're wearing French cuffs. Gold watch. How much was that suit? I bet you that suit was like $1,000, $2,000. And this motherfucker has the nerve to call himself a professional in the marketplace when he was doing something so utterly stupid that just even the mention of it, somebody should have walked up and literally slapped him in the face and said, "How dare you be so irresponsible?" So anyway, if you don't know the story, this idiot went into the natural gas market and started writing call options. And if you understand how the options industry works, he was writing naked call options. He didn't even own the options. He was just collecting the premiums and just, hey, look how smart I am. I can go buy all the French cuss shirts with all these premiums that I'm collecting, can go buy the gold watches. Keep in mind that stupid German guy who was shilling everybody into Bitcoin up at 50, 60 G's. I saw a video where he went around and showed everybody all his gold watches. Look how smart I am because I've got a whole fucking closet full of gold watches. That's not smart. You just know how to shill. Way to go. Anyways, yeah, you're right. Poor cows, eh? Fucking, I can imagine people in India look at that chair and are just fucking nauseated. Good point. Anyway, I mean, this guy is just the biggest idiot in the world. But, what is it with these stupid humans? And the guy gets rewarded. And the worst part about it is, I bet you this guy's out of Florida. Why do I say that? Because in Florida, your house and your personal possessions are excluded from bankruptcy proceedings. So you know what these bastards do is they go and they pile all of their wealth into their quote-unquote primary residence. And, of course, all of his clothing and all that shit. So he can go out and do his options writer's business, and the whole thing can go bankrupt. People can lose tons and tons of money. And then he heads on back onto home. And some of the places that these people live in, just staggering. I mean, just over the top palatial. Half of the reason, why do you think Mr. Trump has his place down there in Florida? I wonder. Anyway, so terribly unconscionable. Anyway, if you want a funny story about capitalism and why you should never, ever, ever get into the business of writing naked options, go learn about this doofus. Okay, so back to our story. Once upon a time, we were talking about this stuff. Remember, I got totally sidetracked. Oh yeah, so the problem we talked about, financial or gross stock valuations, and then I tried to make the connection. And of course, I apologize, but I hope you guys aren't insulted. I get the impression something like a Bitcoin is actually extremely vulnerable. You see where the cost of production is here. Is the natural gas prices moved a hell of a lot? Keep in mind, they say that if you can go to the utilities and lock in big contracts, they'll give you really, really cheap prices. So yes, they probably have gone up, but I don't think so much so that actually cost of production is above reload zones. I wouldn't be surprised, just like we saw last cycle and the cycle before, that what ends up happening is Bitcoin comes down as the interest rate cycle moves up. And we get one of these situations. This is probably the better one for you to reference. At this point, I think it was like the S7s and S9s and stuff. We're basically hovering around this $4,000 or $5,000 area. And as a result, and that was basically industry standard. So as a result, and I remember we had a guy on the site and he did a lot of research and he figured the cost of production bare minimum was like about $2,000-3,000. So there's your floor. So fast forward into next cycle trough. I wouldn't be surprised if cutting edge technology is probably even lower than this, but if we use these as probably what industry standard will be by time we get to next halvening event. That's this chart, which is over here. I wouldn't be surprised we work our way back down. Simon Dixon, 78.6, 78% correction on Bitcoin, buy it. It's just simple logic. But I guess the point is, just like you saw with those tech stocks and the high PE ratios, this is the same sort of thing. This is not value coming in and buying Bitcoin up here. Is it value coming in and buying Tesla up here? No fucking way. It just isn't. Now, is this a great momentum story, Barnum and Bailey? Well, the only problem I have with this is getting to be a pretty damn big company. We're now this guy is $1 trillion company. Can you continue to grow at 30-40% annual rates when you're $1 trillion company? I don't know. It's a little bit sketchy. And also, too, a lot of this was predicated on, of course, money costing nothing. Has that situation changed a little bit? If somebody's going to go and buy a Tesla, but they weren't actually going to buy it, they were just going to take out a car loan, has the Teslas all of a sudden got a little bit more expensive? I think so. But we'll see how it goes. I guess, and the whole point of this conversation, I couldn't give a rat's ass about Tesla. But the whole point of this conversation is I want you to see how, something like Bitcoin, this is a commodity, cost of production, it can be overvalued too. It's not really that big of a deal. And as we sort of take the fluff out of the market, it's interesting how, technically speaking, that's actually looking like a very normal chart pattern that we trade. And A, B, C, D, which would take us down into sort of like, ironically enough, all this is just a good old Benkoff check. The guy's name's Wyckoff, but I do a fun little crypto show weekly with one gentleman, and his name's Ben, and we affectionately call this his Benkoff check. That wouldn't surprise me, and that would take us right into that sort of cost of production window. And then, like I said, with the cost of money kind of conversation, I like the idea that this actually hits a peak. Notice September 2023. Have we talked about 22 and 23 being a bit of a tough slog? Oh, yeah. Turns out that, again, free information off the blog, so you don't even have to pay for this. But it turns out that actually we have a pretty damn accurate historical measure of when this sort of down trough in risk assets should come to an end. You can see 2023. So put it all together, I mean, whether it be things like the DC annual report or the Benner cycle or the fact that valuations are so high, interest rates are going up, the fact that, some of these assets are actually substantially far away from value, there's room for this stuff to come down. Now, back to my original conversation. It took me forever to get back here. I asked you guys this question, so let's see if you guys can remember or think about, maybe you know the answer now. So, what is the proxy in the marketplace that speaks to inflation? What is the proxy that everybody and their brother has used forever? If I think we're inflationary, I'm going to go buy a whack of this and I'm going to go bury my head in the sand. Inflation is growth. So if you like growth, you like growth stocks, well, then actually you want to see this in a bull run. One person answered. Yay. Where's your buddy? The two E's. There's one E. And actually, you start with a J, don't you? Actually, you know what? I'm going to fill my coffee up. And I'll when I come back, I want to see everybody have this on the screen. All right, did we answer? Did anybody answer? No, nobody. Man, you guys are terrible. All right, Edward's like, Brian, you're not going to make me jump twice, you bastard. Gold! All right. Now, and this is the coup de grace. Why did I go down this rabbit hole originally with you guys? Look at that. Some people actually left. So I'm not going to stick around for this bastard to come back. Where should we look at gold? Actually, what I really want to do is I want to look at the gold and silver stocks, because they always say that the stocks always lead the commodities. So we go XAU. This is the Philadelphia Gold and Silver Sector Index. Boom. Now, who can tell me what this chart pattern is? Right here. And the interesting thing is it's just one damn bar. But oh boy, is it a very significant bar. And I'll give you a hint. It also watches, the two previous bars. Keep in mind, this is a weekly price chart. We opened up above all of the previous price action. Right? We opened up here, and we finished below all of this price action past 2 weeks. What do you call that pattern? Is that a bullish chart pattern? And if I say that and then I giggle, well, I think you know the answer. So the market is trying to speak to us. I'd say the market's actually trying to speak pretty loudly. Question is, are any of you listening? I don't know whether you are or not. I mean, obviously, if I'm saying to you, things are going to look a bit tough here, It's probably, I don't know whether that's a message you even want to hear. And I sit here and I go, I see the physical evidence. It is interesting when I go out into social media and I ask, what happened to all of this stock picking experts that we all saw over the past few years come into existence? What is Mr. David Plotny doing these days? I think that's his name, isn't it? David Plotny? There you go. Edward, you're thinking what I'm thinking. We got to play it really cool here. There's no hurry. Right? And especially, you think anything's going to change over there in Ukraine over the next 6 to 8, 12 months? I don't see anything changing. That's probably going to drag on years, I bet. Is anybody, are any of you, they've got 50 people watching this silly broadcast. Are any of you fans of that Mr. Plotny? Wasn't there, what the hell was that? Wall Street bets. How are those bets going? Are people making tons of money there? Are people getting all excited about rip-roaring bull markets? Someone? Yeah, maybe, Josh. So, the whole point of this conversation here, I went down this rabbit hole with you guys originally talking about inflation, deflation. The market here is trying to speak to us. It's one thing to talk rhetoric this, interest rates that. I think earnings this. I think this guy's a jerk. It's another thing altogether, and this is what I'm really trying to do at TRI, is I'm trying to say everybody's got an opinion, and it's fun to listen to the various different opinions. You might agree with somebody, you might not. Oh, by the way, not to get off on a tangent, but let's all keep in mind there are places in this world where people actually want you to not be able to have the ability to express your opinion. And frankly speaking, from an investment perspective, this place, and really the irony of it all is you go all the way back to the damn 2008 Olympics. I mean, this place it's a scam. There's no money to be made here. I mean, yeah, if you can come in and buy W's like a boss, all right, fine. I suppose so. But, in this kind of environment, I remember specifically both of these environments, you listen to the talking heads. And of course, actually, that's even a good looking W there. The sky's falling and you want to be selling here, right? And they jazz up all the sell. Oh, sky's falling, sky's falling. So if you can do the exact opposite and be able to buy when others are selling and sell when others are buying, great. But that means you have to have free will. Does Winnie the Pooh here, does he want you to have free will? I mean, let's call a spade here, folks. Would Winnie the Pooh endorse the idea of you saying, you know what, I think China's a short here? And you know what? Actually, I think all you talking heads, you're really getting everybody in the public all jazzed about selling. I think China's actually a buy here. So I don't know whether it's a buy or sell. I suppose I'll wait for W's to form. But I think it's really important to remember this is all a fraud. Winnie the Pooh just stole just ridiculous amounts of money from everybody. I mean, just insane amounts of money they stole. And the thing is, there's nothing you can do about it. Do you really want to live in a world like that? Is that a good world to live in? I don't. I think it's a very bad world. But, Brian, I've been going on endlessly with you guys. The most important thing that we have is the ability to have our own opinions. This dickhead doesn't want you to have an opinion. In fact, if you have an opinion, you might get yourself in a bit of hot water. How's Mr. Ma's doing these days? Don't hear too much from Jack Ma. How's Jackie Chan doing? Is he making? How's this? Good citizens of Hong Kong. Have you seen what's going on in Hong Kong? They are quote unquote remaking Hong Kong. Oh, Jesus Christ. So, I mean, ironically enough, if it was up to Winnie the Pooh, he would say, Brian, off to the concentration camp you go for actually suggesting that maybe you might not want to buy that. That we might want to listen to the market and not some talking head government bureaucrat. Listen to the market and make your own informed decisions. I'll tell you, if you want a fun assignment and you don't believe me, this is what's called a key reversal. And the only reason why it's called a key reversal is my buddies that I used to work with, they named it, geez, I don't know, 20, 30 years ago. Just do a little bit of research. What happens on a weekly basis? Now, the interesting thing about this is that this market has not confirmed this signal. This market, so all of you can watch this in real time. I mean, like literally, Brian's giving away the secret sauce here. This is an incredibly powerful chart pattern. Of course, you turn on the TV, turn on financial channels, all that kind of stuff. Do you hear anybody talking about this right now? And I'm like, why are they not talking about this? This doesn't make any sense to me. This is hugely significant. What's happening here? And nobody's talking about it. It makes no sense to me at all. Anyway, first off, if you're a skeptic, just go and just do some research. What, Japanese candlesticks people, they call this a bearish engulfing bar. Key here is we want to see 2 consecutive reporting periods. And then secondly, this is a weekly price chart. And what's so cool, and actually I'm very curious to see whether the system will pick this up. But we actually have I worked with this Dutch guy. You heard him on the broadcast earlier today. But he's actually been able to build these key reversal screeners for the market. And you can see, I mean, fascinating. Look how we had a bullish key reversal on soybeans recently. That's interesting. These are daily signals. We also have some really cool bullish and bearish weekly key reversals. Remember, I showed you that weekly key reversal back there a month or so ago on Tesla. But what I want to see is do these, this hasn't been updated as of this week yet, but when Sior does run the update engine, do we actually see bearish key reversal signals in these gold indexes and stuff? I'll be very curious. And if not, we have to figure out why the system didn't pick them up. But anyway, the point that I just wanted to make here was, I guess we don't see it here as of yet, but like bearish key reversals on the weekly basis. Oh boy, some of these are huge. Actually, I'd be curious to see. ORLY got busted out. So I was a bit surprised, but actually I did see the stock coming back off again. But it'd be interesting to see what Lowe's has done. There is a weekly key reversal on Lowe's, and this kind of makes sense too. What do you think? How do you think the home improvement business is going with the cranking higher of short-term interest rates? As maybe that whole house flipping kind of phenomena, is that maybe put on the kibosh? I think so, and I wouldn't be surprised if this thing really comes off a chunk here. But we should see this, this is a gold and silver index. But, what are some of the big stocks in that index? Well, biggest gold stock in the world. Oh, Jesus H. Opened up higher, closed lower. Outside, downside, key reversal. And as I had said there earlier when we were studying this, the key to this is, do we trade through that low? Now, I don't know what's going to happen. Today being Sunday, screwy day. Maybe we open up here and we just work our way up and they break it to new highs. And the key reversal signal never comes in. But if we trade below, what is this? This is 150.19. And of course, today's Sunday, so that means, well, I mean, we'll see, out of Asia. If they come right out of the gate and they're selling, I mean, is Shanghai even open yet? I see somebody say there Shanghai is super free. I think I heard that they literally locked down a whole city of 30, 40, 50 million people. I mean, just insane. That's definitely deflationary. That is not inflation. Oh, and by the way, the real estate bubble in China has popped. So that's like old history. Again, more deflationary talk. I wouldn't be surprised if we actually hear a cascade of Chinese corporations going bankrupt. Something like the Chinese consumer is something like it's like 300% debt to GDP kind of idea, no debt levels that they're running. In Canada, I've told you plenty of times, I mean, the housing affordability here is almost laughable. So you can feel that the real estate bubble is finally breaking. So anyway, this would be, and if that bubble does break, well, that's going to be deflationary. So it's fascinating to see the gold and silver sector are already starting to say, hey, pay attention. And this is the market talking. This isn't some opinionated mouthpiece. I mean, obviously I'm an opinionated mouthpiece, so I'm talking. So maybe that's a bit hypocritical, but the key reversal is the important thing here, not Brian's opinion, the key reversal bar. This is the market speaking, and it's speaking pretty damn loudly. So anyway, let's all watch to see what happens tomorrow. Does this actually fire? Yeah, I know. Okay, so there was one BCS question here. It was from like a site member. Keep in mind, our class is on. I guess they're writing exams right now and on hiatus. So I don't even know whether that was productive use of the Sunday showtime or not. I hope you found some use to it. I mean, the irony of it all is they always say there's a bull market somewhere. So, through the weekend, I'm not overly excited about taking risk in the marketplace. If there's stuff that I have on the books that is rallying and it does double, triple what I bought and paid it for, all right, fine. I guess I'll take profits. But I'm not really excited about buying a lot of stuff. And I've had to take a few stop out losses recently, so I'll take the wins. What you give back on the what is it? What you make on the rounds, you give back on the turnabouts. Something like that. I can't remember how that expression goes. I wouldn't say I'm not going to cover off the ball, but the wins are sort of offsetting the losses, so it's like sort of like just treading water right now. So I think there was something that was called like KNC. I suppose I think this is it. I don't know. I think actually I put a tweet up. That's the easiest way for me to remember. Oh, I could pull up the site's chat, but I'm just so scared about pulling that up. Where do I have it? Actually, over here probably is. On the site, if I ever do a trade, I will post it in Brian's Big Fat Bot. Yeah, here it was. Oh, it was KNC. So we got off a really nice treat here through the weekend. I certainly wasn't expecting this, but hey, profit. And the interesting thing about this is I didn't even really clue into this. The way that I clued into this was I woke up and a whole bunch of people were all in the TRI lounge going, hey, look, I got a wicked double. Hey, I got this double. Hey, fucking we're making money. I was like, I better go see if I have any of that. And sure enough, oh yeah, look at that. Actually, well, I'm doing pretty well. What the hell? Why don't we let some go? So that was kind of a nice treat. I was not expecting that. But if anything, great analogy of our site and the community working together. Of course, good trades, good trade. There were a ton of TRIers that picked this thing up off the bottom. So that's what we do around TRI, but it was a really, really good analogy that I was just reminded of the trade by our community because a whole bunch of people banged out some nice wins on the trade. So way to go, TRIers. That was a really, really nice treat to wake up to yesterday. I wasn't expecting it. It was a nice, like wasn't 5 digits, but it was a high 4-digit win. So, hey, what the hell, eh? Nice trade. Now, what I'm supposed to be doing here is actually supposed to be answering questions. Unfortunately, though, like I said, school's on hiatus right now. So I think thought I saw Chris actually cut and paste the question into here, didn't you? Let's see, it's way up top here, though. Okay, Chris. Yeah, Chris is trying to help me fix the darn. I don't see it here, though. Do you have the link to the document?
It's in the Google Meet chat.
Google Meet chat. Yeah, that's where I am. Oh, there's the link right there. Okay, well, let's see what we got here. So I like to operate off these kind of like group documents. So anybody that's on the site, if they want to ask me something through these broadcasts, they can. And then we have a nice record, right? And then you can go back and watch the thing later on, trying to figure out what it is I said. All right, so I guess this is 424. Hi, Brian. I'm looking and trying to understand the chart below. 30-day Fed funds interest rates, GE1, ZQ1, GE. Why don't you think we are like in 2015, looking only from similarities on the chart? 2015. Yeah. Yeah, looks logical. Interesting thing about this is it feels as though the Fed's actually a little bit behind the curve. And they're having to play catch up here, right? Your yellow line, I guess that's your Fed spread, right? And you can see that the market, short-term interest rate market itself, is in free fall here. Actually, this is a pretty good example. You can see. So at this point here, the Fed was probably getting a bit behind the curve, and then finally the Fed, wanting to get ahead of inflation and just put the genie back in the bottle. Remember, I had said earlier that. Do you guys remember through the crisis, right at the very beginning, shouldn't we debate mortgaging our kids' future? I don't even know if any of you watching the video were even around back then. But the Fed speakers, including Powell and all that, were like, no, inflation's not a problem. No, don't worry about it. No. And then they're like, the economy will do fine. The economy will do fine. And then as time went on here, I guess maybe inflation isn't transitory. Remember that? Oh, no, inflation is just a short-term thing. It'll be gone. And then, I guess maybe inflation is a problem. Oh, I guess maybe we have to get serious. So what we have to learn from that, really, it was really, really good lesson, everybody. Don't look to the Fed to predict the future. And then I would also say that they're in their ivory towers and they don't actually have a very good look at what's actually going on the ground. And then I'd also say that whatever that they do, you have to understand that a interest rate increase or decrease takes a good 6 months or so to actually be shown in the economy. So like here, for example, they cranked rates right down to like zero, basically just, as low as they could possibly get rates as fast as they could. And it took a while for the market to actually start to see that, hey, the cost of borrowing is zero. And then on top of that, we have this massive government spending program. You're going to take interest rates to zero. That should be inflationary unto itself, encouraging people to borrow money because money doesn't cost anything. All right. go and borrow a ton of money. That should inflate the economy. But on top of that, they also did this stupid fucking Sleepy Joe over the top insane stimulus package, trillions of dollars in new debt. Shouldn't we debate marketing our kids' future? And then, the socialists were like, okay, that's not it. We want more. We want more, right? And this stupid little fucking MMT bimbo politicians down in the States, stupid fucking idiots that don't understand money actually costs money. No, we can just print. And if anything, this is the number one reason why the powers that be down in the States would prefer that the banksters actually control the money supply. Because if the U.S. government actually was in control of the money supply, can you all see how, what was her name, Cortez or something like that? The MMT people, they would have gone fucking absolutely crazy there a couple years ago. And also, I mean, like, are you guys with me? Is anybody with me here? Do you understand what I'm saying? Look at what's happening in my country. There are no checks and balances in my country. And the stupid idiots like, oh, you get 10 billion, you get 10 billion, you get 10 billion, you get 10 billion. And the fucking inflation is like, double digits, probably gonna be triple digits before we're done this. Is anybody with me? Do you understand what I'm saying here? Did I lose all of you? Did I lose any of you? Are any of you with me? So in a weird sort of way, you actually have to be a bit thankful that the banksters actually don't control, or excuse me, that the banksters actually control the money supply. Because if you actually left it to the politicians down in the States to control the money supply, and to a de facto, I think that's what's going on in my country. Keep in mind, they never had to do QE here in Canada. Why on earth did they do that? But anyway, in the States, I remember listening, there was a right-wing politician that was grilling Powell one day, and he was actually going, thank God you're in control of the money supply and not these socialists. Because if these socialists were in charge of the money supply, oh my God. I mean, you see what happened to the Soviet Union. Soviet Union went broke because socialism doesn't work. And if anything, hopefully the U.S. Federal Reserve and the banksters are going, okay, look, enough is enough. We gave you a free ride through the crisis, right? You can even argue the gold market is showing you that. We gave you the free ride through the health crisis. And I remember Powell even himself saying this. We gave you the free ride through the health crisis because that you don't want to shit on people and send them into bankruptcy while they're also on their deathbed. That's not really fair. But I get the impression that the health crisis is now yesterday's news. And now what's worse is these politicians, like in my country, the politicians are now actually completely straight face. They are blaming Vladimir Putin on the inflation. They're not blaming themselves, even though my little fucking Eastern European studies clown, who's my finance minister, she's been going, oh, you get 10 billion, you get 10 billion, you get 10 billion. Where are you paying for these? More jobs, more jobs, more jobs. Right? I've tweeted these out. I mean, it's laughable what's going on in my country, how terrible it is. And then they have the nerve to turn around and say, well, the inflation that you're having in your life right now is because of Vladimir Putin. Fuck you. What a fucking slap in the face. It's a criminal slap in the face. So I don't mean to be rude, but I would actually like to see Mr. Powell say here, look it, we gave you a free ride through the sickness. Now it's time to tighten some belts here, people. We got to rein this insanity in, and we got to get back to good business practices. And this right here is the number one evidence screaming at me that actually the Fed might actually be gaining some credibility in the market's eyes. Does that make sense what I'm saying? Anybody? Hope so. Anyway, sit here blabbing away. I don't know whether half of you guys listen to me or not. What it does mean, though, like if this thing does fire, it means, we got to do some belt tightening here, people. I mean, if you want to play the market short, fine. I mean, I've got, one trade that I really like right now. Of course, you know how much I love my Canadian banks. But what are we supposed to think if we ever see the market smiling at us, folks? And my options buddy, who's actually now the instructor for the level 3 course, which I'm so proud of him. I'd love to see him do really well. We're actually kicking around the idea of how we get in on a spread trade here. But that's a trade I'm very interested in. And they always say, obviously you Americans aren't going to like this, but they always say that you want to follow how the market does, just follow the Canadian banks. They're actually more powerful than the U.S. banks because the Canadian banks, they basically own the central bank here in Canada, which to all intents and purposes, I believe, is basically an arm of the Rothschilds. So, that's speaking to me as a technician. I look at that and I go, well, actually, that makes perfect sense. If Mr. Greenspan's like, okay, enough is enough. And we know that it's not even Mr. Greenspan. Like, don't fight this, people. Don't sit there and go, well, I don't care. I don't like Mr. Greenspan. Or did I call him Greenspan? That's hilarious. Powell. Mr. Powell's getting some credibility back in the marketplace. But remember, it's not Mr. Powell. Mr. Powell's hands are tied. He doesn't have any choice. This is the market. The market itself is saying, you have a problem with inflation now. You better get your act together or life is going to get extremely difficult. And that's the hilarious part about these socialists is you want the number one way to bring a market back down to earth and stop all this idiot government spending. You crank interest rates up, and then all of a sudden their hands are tied. Sorry, all social programs have to be cut back. Government, free government money, all that kind of stuff, all chopped off. So, and as I said to you before, like this is the market. This is the Fed. The Fed, if they wanted, actually, let's go back to your image, right? That's probably a better way to do this. All right. There's the Fed trying to play catch up with the market. If the Fed just said, nah, screw it, we would be in crisis. Whenever this line goes above 1.0, this yellow line, that is saying we have a problem. Houston, we've got a problem. And so as a result, what a surprise. Now, I think you even heard Powell say, you know what, we're even thinking about jacking up 0.75% in this next rate meeting. And interestingly enough, that you can see if they go 0.75, you can see the market. The market's shitting its pants right now. If they go 0.75 and catch up with this thing, that's going to be like this scenario. You can see market was shitting its pants. The relationship was starting to crank up, and the Fed came along and said, "Okay, fine, we'll raise." But I made this earlier, this reference earlier. How did the Fed do managing the inflation issue through that sickness? I would say they did an okay job. I mean, the whole fucking thing didn't fall apart, so that's good. But I think they were a bit slow. And I think they went too far. And guess what, folks? That's exactly what the Fed always does every single time. That's the most important thing about what I'm trying to say here. Is here the Fed went too far. Yes, they did they got rid of that crisis out of the market, but you can see we had to base, and then finally the market turned around and started heading higher, and you get this violent swing. But look how long it took, right? So if we are in that crisis phase where euro dollars are freaking out right now and the Fed's starting to get its act together here, you can see that was like 2002, 2003, 2004. They didn't finish the interest rate rises until 2005, 2006. They're getting close to 2007. So get used to it, folks. The Fed will be on the interest rising warpath for quite some time. And then also too, I mean, you guys know this. Don't kid yourself. Good old, I'll finish off the video at this because like I said, we got to get pretty for the boy. But Bitcoin, does that look like a pretty typical 4-year cycle event? I mean, the irony of it all is the only thing that's sort of out of whack in this image is just the relative size of that peak versus that peak. Other than that, other than this one variable here, there to there, other than that, everything else looks almost identical. Base, base, breakout, rally, breakout, rally. Look at the timing. September to April, September to April, April to July, April to June. Pretty damn close. June, July, rally peak into November. June, July, rally peak into November. Pull back into February. Pull back into February. I actually like the idea of a little bit of a rally here into May. Maybe this was the extent of our rally. I think there could be a little bit higher, but if this is it, this is it. And then ultimately bottom there in January. And this base, all right, you can see, took a while, probably like a good 6 months or so for us to go, yep, that's it, we're done. So same sort of thing. Could very easily see, you know, we some sort of seasonal peak, then dump, and then a nice little consolidation into that 23 year. And as we had sort of said, based off of the interest rate rising path, that should take us, you see how long this took us here, that should take us into good old 2023, into that window. And then, you know, we had the Benner cycle, which I think is just an awesome little reference piece. It's remarkable how consistent this is. And in a weird sort of way, right? Wall Street doesn't want you to buy into this. Where the hell's that damn image? Wall Street doesn't want you to buy into this because can you imagine that if you just simply had this roadmap and you said, you know what, there's nothing really to do here until 2023, how is Wall Street going to make any money? If you just say, you know what, I'm going to leave it alone, I'll come back when it's easy mode. How does CNBC keep paying the bills? They can't. So, and this is the fundamental flaw with capitalism. Capitalism requires you have to continually have buyers. The sad part about it is there's somebody had to be a buyer up here. Somebody had to be a buyer up here. Now, I'm trying to help you guys. Was there somebody in the public who is all like, oh my God, this guy's so smart and he's so rich and he's so awesome, who is basically contradicting the shit that I'm trying to teach you people to keep you out of trouble. And it's so frustrating. And the reason why, and of course, the answer is yes. The reason why is because the guy makes money off of the shill. No more shill, no more gold-plated steaks. All right, or gold foil. I can't believe these people actually eat steaks covered in gold. I mean, talk about fucking ostentation. So, I mean, it pisses me off that I built this school to try and make a positive difference in this world. And a guy who theoretically goes through my school and theoretically gets educated, he comes out in the public and he just makes an ass of himself. So, go figure. Okay, somebody said they had one more question they really wanted me to answer, and then I'll try and. So I don't know. Did that answer your question? I don't know whether that actually answered the question or not. Eddie, did it answer the question? All right, you're saying yes. Okay, cool. I hope it helped. Will the Fed go too far? Absolutely. Have we got a recession coming up? I think so. Ironically enough, and I've told you guys this before, I think the U.S. market's actually going to do okay. Why? Because the U.S. market has already had its housing disaster. How about a country like Canada? Has Canada had the housing disaster? No. And the worst part about it is Canada has not had its housing disaster, but the Canadian bankers, they've already done QE. They can't do any more QE. What are they going to do when Canada does have a housing disaster? Uh-oh. I mean, it's so cliche. Think so as well. Just thinking that this can be in 1 to 2 years. Well, I wouldn't be surprised if the Fed takes this way too far. And the interesting thing is that the market is already speaking. Do you think that if the Canadian banksters were thinking that the real estate bubble is going to continue on, do you think that the Canadian bank stock would look like that? This is a weekly price chart. The market is speaking here, folks. Are you listening? The market is speaking. Let's go back to that other market. The market is speaking here, folks. Are you going to listen? It's up to you. Not me. But you know how I'm going to be thinking. It'd be interesting to see what happens on the open here. If we go through this low, the top, my friends, is in. So we'll see what happens. And, for the sake of you all getting stinking rich, and I'm going to ape in and FOMO in and all that. Well, I hope I'm wrong. But my hunch is that, the irony of it all is all of this was actually, according to my analysis, was actually supposed to start here. So this sickness did nothing more than it actually, and in a weird sort of way, you can kind of see this. Because this is where I thought, and according to all my studies and stuff, this is where I thought that the cycle was supposed to shift. But you guys have heard me say so many times, right? Brian's usually right, but Brian's usually early. So we got this crazy nut job down in the States that basically threw the whole damn world into chaos there for 3 or 4 years. I actually think that this is sort of the world's reaction to Mr. Trump's activities. Was this pre-planned by the 1% to get us back into their sort of control mechanism? I don't know. Maybe yes, maybe no. Who knows? But, if I was looking at this from that 2008 perspective, I would say, well, my technical objective was there to there and there to there. I still think that, now that doesn't make much sense because I don't think we're going negative. So maybe we'll go like this. So there to there and there to there. Let's see what happens when we do that. No. Oh, yeah. Okay, there we go. Yeah. So that's what I think originally was supposed to happen. So, and interestingly enough, and actually this makes sense, I think it was probably supposed to take that long. It's a very, very long time. Like way out into here. Well, maybe that's a bit much. I could actually see now that actually makes a lot of sense. Something like that. And we might be having to play catch up here a bit with the massive reversal pattern. So that's what my economic thinking says, is that into 2030 and 2035, this should be a deflationary cycle. And the commodities markets, they're done. Now, what's so funny about this isn't actually the real market. In reality, this is what this asset's really done, which just, oh, we don't want that. Which is it's remarkable when you see the con job that 1% is pulled off here. How the hell do you do that? This? No. Anyway, if I just go M2, yeah, there we go. All right. So anyway, let's see what that looks like. So there's actually your market. So how tragic, eh? There's the dot-com boom right there. So interesting enough, this is actually the bottom of the gold market. How ironic that gold is actually worth less than gold stocks are worth less than they were at the last greed cycle peak. That's incredible, eh? I mean, gold stocks did nothing here this cycle. So poor old gold bugs. Man, they got really frozen out here. So ironic. Okay, let's go look at that other question. I don't know whether that helped or not. Okay, I am confused about inflation, deflation again. Well, no. The worst part about it is this concept is really a manufactured concept. It's just the easiest way for you to think, whoever asked this question, and I think this was Artem, you here, right? The easiest way for you to think about this is inflation is nothing more than the velocity of money. So governments go approve a stimulus package. Is that stimulative or contractive? So that's the answer. Government goes and approves a stimulus package. Is that going to increase the speed of money zipping around or decrease it? Yeah, it's just that simple. Deflation, that must mean that there is less money. Does that make sense? No stimmy check. Going to be deflationary. And I think I even heard that the last stimulus checks go out in June. Oh, what a surprise. You with me, Artem? And actually, I even on the site, somebody, and keep in mind, it makes perfect sense. Everybody asks this question. But somebody even asked me through the weekend, they were having a hard time wrapping their head around it. Might be this person here. Yeah, so this person here is sort of like, I just don't understand this inflation stuff. This doesn't make any sense. Oh, is this you? Well, then there you go. What did I say before, right? Think of the farmer, right? Think about this in simplest terms. So the farmer's got a whole bunch of apples. Let's say it costs him $1,000 to grow his apples, right? Puts the seeds in the grounds, watering, right? All the got to make sure there's no pests and shit. right? And then you got to pick the apples, right? You got to store them. Maybe it costs him $1,000 to grow his apples. If he goes to market and he's the only guy who has apples, nobody else has any apples, and everybody's got tons of money because the government just announced a stimulus program, and they literally are giving everybody like a check at once a month. You with me? Who can do the math? You're the only person at market, and I apologize showing this on screen. That probably isn't very smart. I hope I didn't say anything defamatory. You're the only guy who's got any apples. Nobody else has any apples. What's going to happen if everybody's got their big fat stimmy checks and they want apples? What's going to happen to the price of apples in the marketplace? Can you dictate the price that you can charge people for apples? Maybe you got like 1,000 apples and your cost is $1 an apple. Could you charge $2 an apple? If you're the only guy there who's got apples and people want apples? Does this make sense? You with me? How about all you people on YouTube? Do you understand this? Think of it in simplest terms. This is the easiest way for you to understand inflation. And probably, Chris, I don't know whether I can show this screen or not, but this is a really, really, probably a really good piece for our little sound bites. So you're there at the market. You're the only person selling apples. And everybody's got big fat stimmy checks, and they're sitting at home like that David Plotny guy going, you know what? I'm pretty good at trading apples. I'm going to go buy this. And you're like, okay, fine. My cost to make these things is $1, but since nobody else is charging for apples, I'm going to charge you. Nobody's selling any apples, so I'm going to charge you $10 an apple. And they buy out your apples just like that. Now, last year, you were selling your apples at like 10 cents profit margin, right? You were selling them at $1.10 a piece. What's the price inflation now that you just sold your apples for $10 a piece? Is that inflationary or deflationary? Yeah. I mean, that's exactly what happened through this sickness. Governments basically approved, does this sound at all familiar, Artem? Should we debate mortgaging our kids' future? Shut the fuck up! Does that sound at all familiar? Well, okay, so, all right. So that is we're going to increase demand by giving you a free check, and we're going to limit supply. And of course, they're saying that a lot of, you've heard this bottleneck, right? You've heard that term before, right? So that is creating price inflation. No new supply, no new apples are coming to market. Why? Because all the apples are sitting offshore, sitting there in a container ship right off the coast of California, and the bureaucrats in Sacramento are like, no, we are not allowing those apples into North American soil until the apple itself can prove that it doesn't have COVID. How the fuck do you do that? And when you heard the story, there are like ships of cars. They're literally burning on the ocean. They're just sitting out there, and the damn ship full of Porsches and whatevers, they're sitting there burning because they can't get the fucking cars off the damn ships. Why? Because a bureaucrat in California is going, Well, Mr. Porsche himself has to prove that he doesn't have COVID, and his daughter, who went to the school prom, she doesn't have COVID, and she also has to prove that she has a certain income level. Oh, wait a minute. What does this have to do with the COVID? Well, no, just shut the fuck up. I mean, but just remember our simple model of apples and the farmer's market. And the inflation deflation story makes perfect sense. If you think about the other side of the equation, now we were talking about the Eurozone. Let's say Mr. French farmer has his apples, and his cost to produce his apples is $1,000, but he looks overseas and he sees that there's actually fairly healthy demand for him not to sell his apples into the European market, but to actually ship them overseas. What is that going to do to the supply-demand situation within Europe? Yeah, I better get out of here. All right, you know what? Why don't we'll leave the part 2 and how the euro fits into this equation as inflationary, deflationary. Why don't we leave that for the daily brief after Sjord's presentation tomorrow? Does that sound good? So, Chris, if you could just remind me, and thank you very much for keeping me on time here because I got to get out of here. I appreciate that. Everybody, hopefully you enjoyed that. And if you want to, actually, this is a nice, Josh, you're going to love this. As a nice dovetail, why don't you, if you enjoyed that conversation about how we understood how the inflation part of the equation worked through this sickness, but you want to now understand how a collapsing euro and a collapsing Japanese yen and a rising US dollar is deflationary, why don't you pop on the site, sign up for a 30-day trial, won't even cost you any money. And I'd love to see all of you in the daily brief tomorrow morning. And we'll just carry on this conversation and we'll do part 2 of this. And then the second thing I would say, which is a total added treat, is on Mondays, we have Sjord. You heard him on the call earlier today trying to console me for my technical issues. But you can come on the site if you do decide to pop in to see part 2 of our inflation deflation conversation. You can find out about all the fun toys and tools that Sjord's building and how we can set you up to kick butt in the marketplace. And of course, maybe also learn a little bit about our education program and how we can set you up to effectively run a small business of trading with the expectation of actually turning a profit. So, all right, why don't we leave it at that? Thank you again, Chris, for the reminder. I got to get out of here. PMA for the win. I hope you guys enjoyed the rant. There's going to have to be a few little thrown in there. I kind of lost it a couple times. But if anything, hopefully, hope, I'm making a small positive difference in this universe. If you feel karmically in tune, I ask all of you, can you just give a nice little karmic prayer for Liam, my son? He's a low-functioning child with ASD. I spend Sunday afternoons with him, and I've just found, I don't know why, but it's beautiful. I found that when I ask all of you just to have a nice positive thought and wish us luck, that we have a good afternoon together, on balance, generally, he's pretty happy. So, everybody, could you please just take a moment and give us an awesome karmic thought, and I think we'll leave the broadcast at that for today. All right, everybody. Have yourselves a great rest of your afternoon, evening, morning, wherever you are in the world. PMA for the win. All the best. And Chris, if you could take us out of here, the only thing left for Brian to say is bye.